Please type in yes in the chat. Type in yes in the chat. If I'm audible enough to you, please type in yes in the chat. This is very, very important to know if you can hear me very well. If I'm audible enough to you, please type in yes in the chat before we move further. Okay, thank you so much, Mr. Nyonlere. Thank you so much. Thank you so much, everybody. All right, thank you so much. So let's dive into the whole process. Okay, so if you were here yesterday, please type in 1 in the chat. If you were here yesterday, type in 1 in the chat. If you were not here, type in 2. Type in 2 if you were not here. But if you attended yesterday's class, please type in 1. Okay. All right. I think someone is not here yesterday. But as usual, we're going to run just a quick recap of what we did yesterday, so you can be able to move along with us. This is how we roll. So we're going to run a quick one on that. Okay, within 5 minutes you should be able to through with that. Okay, all right, Mr. Femi. All right, just stay with us. So I'm going to run a quick recap right now. So right now, let me quickly go over it right now. Yesterday I introduced myself to everyone, and as you can see right in front of you, my name is Abolade Adekola. People call me the Kingmaker. So I'm the founder of King Online Trading School, which operates under the license, the company license of the Kingmaker Supply and Demand Trading Solutions Limited. This is a duly registered company here in Nigeria. Okay, I'm a serial entrepreneur. I'm a financial market trader and investor. All right, I have learned and grown my knowledge base with institutional supply and demand trading concepts, which is considered as one of the most accurate trading concept strategy in the world of trading. All right, I'm a trader. I'm basically, my trading experience is gathered around supply and demand, and supply and demand trading truly is one of the best trading concepts so far in the world. Okay, so I see myself as one of the best traders in the world. Yes, and learning still continue. Okay, so I've been trading in the financial market since 2015. Okay, this year makes it 6 years. Okay, and I'm privileged to have trained a lot of people. I've coached and mentored hundreds of students, both physical and online. All right, and of course, what we are doing right here today is just for an educational purpose only, because I'm not a financial advisor. Okay, so guys, before I move to the next page, for those who are new, please quickly tell me where you're joining from, your name and your location. All right, so right now, yesterday we also discussed about a lot of things, but I'm going to run quick one over. Just like I have said, we talked about the ingredients of success in trading. I made mention yesterday that if you really want to be successful, these are the 6 things you need to put into consideration, right? If you really want to be successful, you want to put all of these things into consideration. Otherwise, it's going to be a little bit difficult for you to become successful in the financial market. I know what I'm talking about. I'm saying all these things because this is exactly what you need. Okay, this is exactly what every trader needs to be successful. All right, so you need to perfect your risk management. All right, risk management is one of the most important aspects of trading. Every successful trader out there must have been perfecting their risk management. So risk management, you don't want to joke with it. You need a proven strategy. A proven strategy is that a strategy that has a good winning rate. Okay, which means a strategy you've been using for quite some time, or a strategy you have back tested with a good result. All right, we talked about balanced emotion. You need your emotion to be balanced before you can trade successfully in the financial space. All right, because if you've been controlled by your emotion, trust me, a lot of time your emotion will cause you to lose a lot of trade. So as a trader, you want to be able to learn to balance your emotion. All right, I hope this is very, very clear. So market knowledge is one thing I made mention yesterday. Everything we want to talk about, we've been talking about yesterday, and everything we'll be talking about today and tomorrow and days to come, all you will find everything under market knowledge. All right. So for you to have learned this skill set, it means you've been able to gather the market knowledge. So you want to have the knowledge, the prerequisite knowledge, to be able to trade successfully in the financial market. You need good knowledge. I must tell you guys, good knowledge, and that is why you are here. So market knowledge is very, very important for everyone who truly wants to be successful in the financial market. All right. So we talked about coaching and mentorship. You need someone who will hold you by the hand. What do I mean by someone? Someone who has been there, done that. Someone who has passed through the rigorous process, who really know the right, who already know the right way. All right. That's what I mean by coaching. And again, you must be coachable and teachable. If you are not coachable and teachable, it will be very, very difficult for you to move along with the person. All right. You need a good mentor, someone who is good at trading, who knows what he or she is doing. So you need to find yourself a mentor so that the journey can be cut short and you can be able to get to your destination on time. All right. So you don't want to do that through, you don't want to start trading on your own through trial and error, because it may cost you a lot of things. So you need someone who has been there, done that. All right. So now we talked about practice. Consistent practice. Everything you're going to learn today and what you've learned yesterday and what you'll be learning today and tomorrow and days to come, you need to keep practicing them. If you do not practice, trust me, everything you've learned is going to become zero. So for you to become a master at this, you need to keep practicing. Whatever you've been taught, go back home, make sure you keep practicing on it until you master it, until it becomes part of you. All right. So consistent practice is what you also need. So all the 6 aspects you're looking right in front of you guys, you may want to take a screenshot. If you have not done that yesterday, trust me, this is what you need. If you work your way around these 6 things, trust me, you're going to, in the next few months, you'll be happy with yourself. These are the things we have been working with for some years right now. And we emphasize on these 6 key ingredients to our students, and those who have been making use of them are happy today. All right. I hope this is very, very clear. All right. So 6 ingredients of success in trading are right in front of you. Let's move to the next page. All right. Yesterday we talked about what is Forex. Okay. Forex is all about you exchanging your own country currency to that of another. Okay, which means if you want to exchange the euro to US dollar, it's going to be determined by the economy between the 2 countries. All right. So the exchange rate is just in which a nation's currency is traded for one another. We talked about business of Forex. So what the things you need concerning for you to start trading in Forex are listed right in front of you. So we talked about how to gain access to the Forex world. All right. How to gain access to the Forex world. And the requirement to start trading as a beginner, you need a laptop, you need a smartphone, you need to learn the basics, you need a reliable internet, you need to learn the trading software, which is MT4 and MT5. And possibly today, depending on our time, we'll go practical. Okay. And at the end of these 3 days, I bet you, if you have not been trading before, you will be happy with yourself, because I'm going to teach you exactly what you need to know to start trading. Exactly what you need to know. And that is what we've been trying to do since yesterday. All right. So you need to find a reliable broker for yourself. So if you do not have a reliable broker, we have the ones we are using, and we've recommended quite huge number of people to them, and a lot of them are happy. So for you to start to learn more, you need a demo account. So once you register with a broker, you'll be able to open a demo account. This is a virtual money you can start trading with, but you cannot withdraw. So it allows you to learn more about the market. All right. So let's move further. We talked about trading time and sections. We have 3 major trading sections. Okay, we have the New York, we have London, the New York section, and the Asian sections. But right in front of you, you can see 4. Okay, why is it 4? We have Sydney and Tokyo. They are categorized as the Asian section. Okay, but they are being splitted right here So the Sydney session starts from between 9 p.m. to 5 a.m. GMT, followed by the Tokyo start at the same day, just 2 hours right after this one started. This one continues from there. Okay, so they are interwoven. So in the morning by 8 a.m. GMT, the London market opens, followed by the New York market. Okay, so all these markets, they are interwoven. So which means it allows you to trade 24 hours a day. So during any of this session, we talked about each of these countries' currency moves more better during their own time than every other time, every other trading section. What do I mean by that? For example, the AUD, the Australian dollar, moves faster during the Sydney session, better than when we have it during the London session. All right, we have pre-recorded your video of yesterday's session, so we'll make it available after we finish the whole class, so you can rewatch them. All right, but the joy is for you to be here as you are here right now, so that you can ask any question. So the next page right here is that we talked about technical analysis. Technical analysis, it is an indicator to forecast the future movement of the market. So I emphasized a lot of this yesterday, that for you to become a good trader, you must be a good technical analyst. Okay, for you to become a good trader, you must be good in technical analysis. All right, and you can do that through a lot of indicators, which is talked about few of them right here. As you can see, talked about trend indicator and oscillator, and tomorrow, possibly today, okay, depending on our time, on how fast we are able to move. I'm going to be exposing those who are new to this indicator. I'm going to be sharing some logic with you guys. All right, now we talked about fundamental analysis. Fundamental analysis is the way of looking at the market through economy and social political forces, which affects rapid movement of the market. Okay, which means this is all about news about a country. So fundamental analysis, the country's economy may help the market to move rapidly within a short period of time. Okay, that is what fundamental analysis is all about. And we talked about sentimental. Sentimental is all about hearing what other traders are doing. Probably you hear somebody say, we are buying, we are buying, we are buying. So you want to listen to what others are saying. That is market sentiment. We talked a lot about this yesterday. So the video will be available soon. You can rewatch. We talk about Forex basis. Okay. We talked about how to recognize the 8 most common, which is Euro, USD, JPY, Swiss franc, Canadian dollars, New Zealand dollar, Japan, Great Britain pounds, and Australian dollars. All these 8 currencies are the 8 major ones in the market. Why are they the major ones? It's because they are the most traded currency in the financial market. So that is why they are called the common currency symbols. All right. We also have exotics, okay, which are other currencies. We have Swedish krona, Danish krone, Singapore dollars, South African rand, and a lot of them. All right. And we talk about the most traded pairs, which involves the USD pairs. I hope that is very, very clear. So let's move faster. Right here, we talk about pairing currency exchange rate, okay, which means we talk about the first currency pair. Let's, for example, Euro USD are paired together. The first currency pair by the left is known as the base currency, while the next one by the right hand side is known as the close currency. So you need to know this, which means 1 euro is equivalent to 1.3505 US dollars. And we talked about the fourth number right here is known as the pip, and this is regarded as the fourth decimal place. All right, and the fifth number right, as you can see, this little one is known as the point or fractional pip. A lot of people do not know this, all right, because they only look at the fourth one. All right, so guys, let's keep moving. Time is not on our side, so I'm going to emphasize a little bit more right here on bid and price. This is where we stopped yesterday, so we're going to continue from here. So yesterday we had a question about bid and price bid price and ask price yesterday, but time was not on our side to emphasize more on it. But I'm going to take just 2 minutes to explain, 1 or 2 minutes to explain more on this before we dive into today's session. All right. So we're talking about bid and bid price. Bid price is the price a forex trader will sell a currency pair for, while ask price is the price a forex trader will buy a currency pair. Now, this is the other way around. We explained yesterday that, let's, for example, that you want to buy from the market. If you want to buy from the market, you are going to use the ask price. Why is it ask price? It's because market is the one selling to you. Market is the one selling to you. So you are buying from the market. That is why you are using the ask price. All right. I hope you understand. But if you are selling to the market, you are going to use the bid price. All right. So you can see this is like other way around. Like, for example, you as a person, if you want to sell your car to someone, then you will be giving them the ask price. They will be asking, what is your asking price? All right? What price do you want me to pay to buy your goods from you? So that means they are asking you. They are the one buying it from you. Okay? So they are buying it from you and they are asking you for you are asking them for the price. Okay, this is my price. What are you buying? How much are you paying me? So if you are buying from the market, these two bid price and ask price you are seeing, market is the one presenting it, not you. Is the one presenting it to you, to trader. Okay, market is presenting it to trader. So if you want to sell, probably you have a currency that you want to sell into the market. You have already taken a trade. You've bought a currency pair already, and later on you want to sell it into the market. You are going to use the bid price, okay? Because market is bidding it from you, okay? It's bidding that this is what I'm going to buy it from you. All right, I hope you understand. So if that is clear, please let me know in the chat. I think we have a video. We have a video on that on our YouTube that explains more on that. Because of our time, I'm not going to stay more on this. So we also talk about spread. What is a spread? Spread is the difference between the bid and ask price. All right. So let's, for example, if the value of ask price is 1.3405, while bid price is 1.3404, and the difference is calculated as 1.3405 minus 1.3406. So it's just a difference of 1, which means 1 is the difference. So that is just the spread, and the broker earns their commission through this spread. So we explained a lot about this yesterday, guys. All right. So for those who are joining us for the first time, please let us know if this is the first time you are joining us. So thank you so much, guys, for being here. Oh, I see someone. Okay, all right, Mrs. Ngozi, it's been a while. How are you doing today, madam? All right, so let's keep moving. So today we are going to continue from where we stopped. We are going to continue from where we stopped. So we are going to continue from where we stopped right here. Oh, all right, Mr. Destiny, glad to have you right here. Okay, so can you please tell us where you are joining us from? Just type in your name and your location. So let's continue from where we stopped last night. So today we're going to continue from pips. What is pip? Okay, what is pip and what is the full meaning? It is known as price interest points. All right, price interest points. PIP, PIP, price interest point. So PIP is the smallest change in value for any given forex quote. It is the smallest quote in value for any given forex quote. Now, this is it. Let's say the quote is 1.34001. Okay, let's say Euro USD. Euro USD is 1.3401. Okay, so this is the smallest this is the smallest value of this quote. So this is the pip. The fourth number is the pip. So it is known as the smallest value of any given quote. Okay, this is what changes. This is where the money start coming from. All right. So the change between this one, either to the upside or to the downside, will determine your profits or loss. So if this keep increasing, it means your currency pair, your trade is appreciating. All right. So it is the smallest change in value for any given quote. So this is the smallest one right here. So as this one keeps increasing, so does your profit increase. I hope this is clear, guys. So now, for all non-JPY Forex pair, 1 pip represents the 4 decimal place of the quotes. This is what I've just explained. Now, take a look at the example. When Euro versus USD moves from 1.3505 to 1.3506, this is just 1 pip movement, okay? So pip is regarded as this, the 4th decimal number, which is what you are looking right in front of you, okay, which is 0.0001, for example. All right, so this is 1 pip. The change from here to 2 means that the currency pair has to increase in 1 pip. So if this one keeps increasing, it means it's increasing in pips. I hope this is clear. So it is just a movement of 1 pip. Okay, once this one changed from here to 2, then it means a movement of 1 pip. I hope this is clear, guys. Please, if you have any question in the chat, do not hesitate to drop it right in the chat. Okay, do not hesitate to drop it. This can help every one of us in the class today. All right, thank you so much, Mr. Destiny from Onitsha. Okay. All right, so for JPY pairs, 1 pip represents the 2nd decimal place of the quotes. Yesterday we talked about this right on this, I think on the 7th, somewhere here. Where is it? No, I think, okay, we talked about it right on this page. Okay, but never mind, the video will be available, you can revisit it. Okay, so for JPY Forex pair, 1 pip represents the 2nd decimal place of the quotes, which means if we have USD JPY, based on this example, we have USD JPY moves from 80.55 to 80.87. So when you take this one away from this one, it is a movement of 30 pips. All right. Now, what does this one right here mean? It means that 1 USD JPY is equal to 1 USD. 1 USD is equal to 80.55. Okay. So now let's say the currency appreciates, US dollar appreciates, and it appreciates to 80.87. Okay, so which means this is the price you bought this currency pair. Okay, you bought USD JPY at 80.55, probably after 1 hour or 2 or 3, depending on how fast market is able to move. Okay, and it now moves, rise from this number from 80.55, it now rise to 80.87. okay, which means if you take this price, the price you bought it at, you take it away from this one. Okay, so the difference is just 32 pips. Okay, that is just different. I hope you understand. So the 2nd decimal number is what you are working with as a pip. This one right here, the second one right here. I hope you understand. So when we talk about non-JPY pairs, you can see this one is quoted in four places, right? Why the JPY is quoted in just two after the decimal points. I don't know if this is getting clearer to those who are new, because I know we had yesterday we had those who were not so new here yesterday, and it's been awesome. They also learned something new. Okay, so now take a look at this. We have one USD JPY taken as at 80.55, which is our buying price. And later on, this moves to 80.87, which is the price we have sold. So we have been able to gather 32 pips as a profit, okay, which is what this example is telling us. So always take notes. All the JPY pairs, any currency pair that involves JPY, which is Japanese yen, they are quoted in 2 decimal place, okay? For example, they are quoted in 2 decimal place. So for the currency to start increasing in value, this one will need to start changing from 1 to 2, okay, to 2, then 3, up like that until it becomes 9 or 10. Then this one will not change to 1. Okay, you can see we have right now, we have the 0, 1. If this one should move from this 1 to 10, this one will become 1. Then this one will start from 0 again. If this now increase from this 0 to another 10, this one will change to 2. So the pip is always the second decimal number. I hope this is clear. The pip always starts from the second decimal number when it comes to all the JPY pairs. But for the non-JPY, which is every other one, the 4th decimal number is the pip right here. Okay, I hope this is clear. Everybody, if this is clear to you, please let us know if this is clear. Okay, this is a good question from Mr. Femi. What's the relationship between pips and profit made with 0.1 lot size? Okay, I don't want to be too fast. We'll get to that aspect, the aspect of lot size, so I can explain more about this. All right, but I have to tell you, the pip will determine your profit. The number of pip, let me take it from there. The number of pip will determine your profit, while the number of lot size is going to be determined by the capital you have. Okay, the capital you have in your balance will determine the number of lots you will use. I hope that is clear, Mr. Femi. Okay, you cannot compare those who have $1,000 with those who have $100. Okay, if you have $1,000, obviously the pip, the lot value you are going to use is going to be higher than those who have $100. All right, so to break this down, to differentiate it, your pip value will determine the number of your profit. The profit you are going to make through the pip will be determined through the number of lot size you have, and the number of lot size you are going to take will be determined by your capital. I hope that is very, very simple and understandable. Okay, so we'll still go back there if that is not clear to you, but I believe the way I've just explained it is more clear, it's more clearer. Okay, so they are interwoven, but you need to understand that. Okay, so let's keep moving. Let's talk about trading orders. Trading orders. Now, this is where you're aspiring to be a trader, right? Those who are new, you're aspiring to be a trader, but I tell you, what I'm about to dive into right now, they are as important as a lifetime when it comes to trading. Okay, They are as important as the life heavy human carries. Okay, let's talk about take profit. What is take profit? Take profit order is an order you give to your broker to exit the trade once a certain profit is reached. It's as simple as that one. So now this is it. Let me try to explain, break this down to pieces to those who are new. Now, we call take profit. Why is it take profit? This is another you give to your broker. Let's, for example, you have taken a trade right here. Okay, I'm going to draw a diagram right on this page. Let's say you have taken a trade right at this place, at this level. You have bought right here. Okay, for example, you bought right here. Now you are saying price should go up. All right. Now you have a predefined target. Your predefined target is when you want to take your profit. Okay, probably you bought it at, let's say, $1. For example, $1, which is at this level. Now, your take profit order is the order you have given to your broker that, okay, I want to take my profit out of the market if this trade should move from $1 to $3. Okay, to $3. If this market should move from $1 to $3, I want to take my profits. Why do we have to set this take profits? This take profit is something that you need to set. You have to set it. You are giving the order to that broker of yours. Probably you are not there to close that trade by yourself. You are giving the order to the broker to close that trade for you on your behalf. If the trade should move according to your projection in profit, if the trade should move to $3, please close this trade for me in profit and bank my profit for me. That is what this means. Okay, take my profit from the market, bank it in my capital. Okay, I don't want to target more than $3. This is what take profit is all about. Okay, and we also have stop loss. Stop loss order represents it's an order you place with your online broker to exit the trade once a certain loss is reached. All right, this is just the opposite side of take profit. As you have your take profit, you have taken your trade right here. As you project that market should go up to this level, to $3, where you are thinking to take that profit out of the market, being the order you have given to your broker to close that profit for you. The same way you want to do to your stop loss. What is stop loss? Stop loss is to cut your loss short. Peradventure, let's say you have taken this trade right here. You have bought it right at $1. And from your capital, you only risk 2%. Let's say you only risk $2 to buy this. But the price, or let's say USD, let's say Euro USD, for example, is at $1. Is trading at $1 at the point as at the time you bought it. Now, let's say you risk just 2% to open the position, $2. For example, let's say you are using $100 as your capital, and you now use $2 to buy it from here. Okay, so as you set your take profit, you want to set your stop loss. Okay, your stop loss is another you give to your broker. If this trade is not going in my favor, is not going in profit, and is going against me, the moment my loss is up to $2, please close it in loss for me, because I don't want to lose more than $2 of my account. That is what take profit means. The reason why you need to set this take profit is simply because Forex market is diverse. Anything can happen in the market at any point in time. So that is why you need to have this stop loss in place in case you are not there. If market is not going in your favor, so you've already set your stop loss for that trade to close in loss when a predefined amount of your capital is lost. Okay, this stop loss protects you in order not to blow your account. This is really, really powerful. I tell you, any trader that is not using a stop loss, it's a gambler. Yes, but there are some professional traders who are not using stop loss. But for them to not to use stop loss, they have to put a lot of things into consideration, which I cannot explain right here. All right. Now, for you as a beginner or an intermediate trader, stop loss is very, very important. Okay, it's very, very important. So as your stop loss is important, so does take profit. So these two things, the moment you pick in a trade, is either you buy or you sell. It is a must for you to set your stop loss and your take profit. In case if trade should go in your favor, then you will take the profits. The trade will close automatically in profit. And if the trade should go against you, it will automatically close in loss. Okay, in little loss based on the amount you have risked on that particular position. I hope this is clear, guys. Please, somebody should let me know if this explanation is clear enough. I want to be sure I'm communicating with you guys. I want to be sure I'm communicating. Please let me know if this is clear. I want to be sure I'm communicating with you guys. Only one response. I want to be sure this is clear to everyone. Still waiting for your response. Okay, thank you so much. This is clear. So if you have any question, those who are yet to respond to this, please, if you have any question, let me know in the chat. Let me know quickly if you have any question before we move to the next slide. Time is not on our side. I want to be sure we go more practical tonight. I want to be sure we go practical tonight. All what we've been sharing since yesterday are just theoretical aspect of the training. But Forex is all about 85% practical, 15% theory. It's as simple as that. So guys, let me know if you have any question in the chat. If there's no question, please type in clear in the chat. Okay, so let's move further. Okay, somebody said he wants to unmute. Okay, if you need to unmute next time, just raise your hand, then that will be clear. So let's quickly answer this person before we go further. Okay, let me look for this person. I think I can't. You should be able to unmute yourself. I think your mic is not active, Mr. Emmanuel. Probably you need to, your mic is not active, Mr. Emmanuel. So obviously you may not be able to hear me out. Okay. Okay, so let's keep moving because of our time. So you may reserve your question to the end. Then I may have the, okay, let me try to unmute him. Just quick one before we move further. You can unmute yourself. Good evening, Mr. Emmanuel. How are you doing today? Okay, I think we need to move because of our time. So let's reserve the question to the end of the session. So we're going to attend to it. Okay, sorry about that. So let's move in because of our time. So let's move to the next slide. Now let's talk about contract lot size. Now I want to talk about lot size right here. What is a lot size? What is lot size? It is the amount, quantity of a trade that you bought or sold at a particular point in time. Sorry guys, few seconds please. Sorry guys, sorry for keeping you waiting. Okay, so we're talking about lot size. Now, I want to share something really significant with you guys. Those of you who are new and perhaps those who have been trading before. I will tell you that lot size is one of the aspects why traders loses in the market. It's one of the reasons why traders blow their accounts. Yes, this is where a lot of mistakes happens. Now we have three different types of lot size. And what is lot size? I've just explained that it is the quantity a trader wish to buy or sold at a particular point in time. Okay, so which means if you are opening a position, if you want to buy or sell any currency pair, okay, it is a must for you to use a lot size. And regardless of the amount you have in your account as your capital, you need to pick a quantity. Even if you have $1 million in your account, you still need to pick a quantity at a particular point in time. Okay, and your capital is going to determine the type of lot size you are to use. Now, number one, we have three different types of lot size. We have standard lot size, we have mini, and we have micro. All right. Now, what is a standard lot size? Standard lot size contains 100,000 units and it's represented by 1.00 on the trading platform. Now, this is the highest lot size. Okay, you may trade 2, you may trade 3, you may trade 4, but when we talk about standard lot size, it is 1. There's nothing like any other lot size that is bigger than this. You may trade 2 lot size, you may trade 3, but when we talk about standard, it is just 1, and this is 100,000 units of that lot size. Okay, I hope this is clear. Why we have mini lot size contains 10,000 units and it's represented by 0.1 on the trading platform. Okay, followed by a micro lot size contains 1,000 units and it's represented by 0.01 on the trading platform, and this is the smallest lot size on the trading platform. Okay, so for you to even trade, for example, for you to trade standard lot size, you cannot compare yourself with someone who will trade this. So the person who will trade this will have lesser capital compared to someone who wants to trade mini lot size or standard lot size. Okay, so standard lot size is for those who have higher capital. Let's, for example, from $2,000 upward. Okay, before you can think of taking a standard lot size. Now, I'm going to explain more about these units. Okay, because I know this is getting a lot of you guys confused. Now, let's make use of this area right here. One standard lot is equal to 100,000 of the base currency. All right. Now, let's make use of this. A standard lot size, standard lot is 100,000 units of a base currency. E.g., when you buy one standard lot of Euro USD, you are buying 100,000 units with US dollars, which means the moment you buy one standard lot, you go into the market based on your capital. You just, okay, I want to buy one standard lot right now, and you are in the market, you have bought one standard lot. Okay, now this standard lot, the moment you buy it, you have already keyed in 100,000 units. Okay, which means this unit is the quantity. I hope this is getting clearer. This 100,000 is the quantity under this one lot size. All right. Now take a look at this diagram. One lot size, the unit under the standard is 100,000, which means the 100,000, the one standard lot size is being broken into pieces. All right, which means with that, for example, let's use Bitcoin as an example. Bitcoin trade is trading over $50,000 right now. But you as a trader, if you want to trade, you want to buy Bitcoin and you want to keep it, and you do not have up to $50,000, does that mean you cannot trade Bitcoin? Of course, you can trade it. So you want to buy the quantity your money can afford to buy. I hope you understand this. So the quantity at which you buy with your money, it's what is called the units. Okay, the same way, right, as we have the standard lot size. Okay, so once you buy one standard lot size, you trade one standard lot size, you automatically trading 100,000 units. Okay, 100,000 units. And if you are trading mini lot size, which is this, you are trading 10,000 units, which is divided by 10. This is divided by 10. And for micro lots, which is the smallest, then if you take one micro lot, which is 0.01, then you have just keyed in 1,000 units. So the more capital you have in your account, the more lot size you're going to pick. All right. So if you have $100, you'll be able to trade this. If you have $100, you cannot trade this one. For you to be able to trade this, it means you will have nothing less than $600-700 in your account, or perhaps $1,000 in your account for you to be able to trade mini lot size. Okay, so now does it mean if you do not have to up to $1,000, you cannot trade? Of course you can trade. You can trade within this micro lot size. You can trade within this micro lot size. So if you have $100, you want to trade is 0.01, and if you have $200, then you want to trade is 0.02. It's as simple as that. Okay, so we're still going to go back into the money management when we go to the practical section. All right, so now guys, let me know if my explanation is a little bit clear to you right on this session. What's the recommended lot size with 500 trading accounts? You can use 0.01, 0.05, which means each $100 in your account will be represented by 0.01. So you have $500, you're going to use 0.05. I hope that is clear. That is just a simple money management. We are going to teach more on this to you guys. Don't worry. All right. So now, guys, let me know if this is super clear to you. I know for those of you who are new, this may not be really clear to you, but I tell you, as you journey in this space, you will understand it more better. Okay, you will understand it more better as you journey in this space. Okay, so now we have just finished explaining this. Let me know if this is clear to you. Let me know if this is clear to you. Typing something in the chat if this is clear to you guys. Let me know in the chat if this is clear to you before we move to the next slide. I want to be sure I'm communicating with you guys. That is very, very paramount. Okay, somebody said clear. Okay, thank you so much, Mr. Femi. Okay, all right, thank you, I appreciate that. Thank you for tuning in. Okay, so let's move to the next one. Since we not have any question, and if you have any question, you can drop it in the chat. Okay, if you have any question, please drop it in the chat based on what we have just explained right here, so we can move further. Okay, so let's move to the next slide because of our time. Now, let's talk about how to profit from the move. It is important for you to be able to know how you make money when it comes to this business, because any business you want to go into without knowing the profits you want to make or the loss you want to incur, is going to be really, really difficult to be successful in that business. All right. So now, this page, we want to talk about how to profit from Forex move. Either you are buying or you are selling. Okay, it's either you are buying or you are selling. Okay, sorry guys. Okay, it's either you are buying or you are selling. It is highly important for you to know how you're going to make money. So once you have this mindset, believe me, it's going to start making a lot of sense to you. It's going to start making a lot of sense to you. Now, look at this, guys. Let's make an example with Euro US dollars as we are seeing right here. Now, let's, for example, we want to buy, which means we want to go long, okay? And part of the terminologies for those who are new is that when we say we are going long means we want to buy, we are buying, okay? And when we say we are going short, it means we are selling. I hope this simple thing is very, very clear to you. You may want to jot that down if you are totally new. When we say we are going long means we are buying, and going short means we are selling. Okay, so now let's say for based on this example, we are going long, which means we are buying Euro USD one standard lot contract at 1.3510, which means 1 euro is equal to 1.3510 US dollars. All right, and we are buying one standard lot right here. So this standard lot, it means we are buying 100,000 units. Okay, see guys, you don't have to bother yourself about the units. Okay, what you are most concerned to use is the lot size. And we are just sharing this based on educational, for just educational purpose. All right, so when you are trading, you don't want to be concerned about the units. Okay, you don't want to be concerned about the unit. What you should be concerned is the lot size you want to use. Any lot size you use should be based on your capital. Okay, so if you have taken one lot size, automatically you should know that you are trading 100,000 units. So you don't have to think or start looking where you are going to see this. No, you are not going to see this. You are not going to see this written anywhere. The only thing you will see is your lot size, and your lot size will be seen and feasible to you. So once you see your lot size, you take a standard lot size. You know in your mind that you are trading 100,000 units. And if you take mini lot size, you already know in your mind that you are trading 10,000 units of that particular currency pair. And if you have taken micro lot size, you know in your mind that you are trading 1,000 units. I hope this is clear. So don't start giving yourself that headache and start thinking, why not take one standard lot? Where do I have to put in this 100,000 units? No, you don't have to write that or put it anywhere. You are only concerned about your lot size. Okay, I like to make emphasis on lot size, because I know this is where a lot of traders are mixing it. I have been there, done that. Trust me, I'm telling you from experience. All right. So as a newbie, you don't want to enter into the market blindly. What do I mean by blindly? You don't want to enter anyhow lot size in the market. Once we go practical, I'm going to show all of these things to you. What and what you need to do to start trading. And believe me, you follow it in the next few days or few weeks, you will be happy with yourself because you are going to see some progress. All right. So let's explain further about this. So let's say we are going long. We are buying one standard lot of Euro USD at 1.3510. Now, take a look at this. Let's say we buy right here, Euro USD at 1.3510. Now, I'm going to draw a diagram so that you guys can understand better. Now we bought at this price, which is 1.3510. Now later, after price increase, okay, let's say we bought it right at this level, 1.3510. Okay, we bought it at this level. Later on, it now increased to 1.3550. So we sold at this level. We sold at this level. So you are going to take this one right here, away from this one to give you your profit. Now, what is the profit you want to get right here? We only want to get the pip difference. Okay, I take this again. We only want to get what is the pip difference between the entry price and the close price, because this is where we bought it from. So the area we bought it from is known as the entry price. We call it EP, entry price. So let's say this is the entry price. We bought it at 1.3510, which is our entry price, and we later sell it at 1.3550. So you are going to take your entry price away from your closing price, because you open it right on this amount and you close it out on this one. So this is your opening price, this is your closing price. Okay, in the case of buy, I hope this is clear. In the case of buy, so now look at this diagram. So when you take this one away from this one, the difference is just 40 pips, which means this currency pair, as at the time this slide was prepared, this currency pair has moved from 3510 to 3550. So when you take this one away from this, you are going to get 40 pips. So which means the currency pair has moved up in 40 pips profit. 40 pips profit. Remember, profit pip is the pip. Okay, so now how do we know the profit? This is how the profit is being calculated. Number of pips. Guys, listen to this very, very well. It is very, very important. Although you don't need to calculate all of this when you are trading, you don't need to calculate all of this, but as a trader, it's important for you to know how you make your profits. It's important for you to know how come you are able to make a certain amount of profit. That is why this we are able to break all of these things down in this slide. All right. So now the number of pips, which is 40 pips, multiply by dollar value per pip. Now, this is it, guys. We have 40 pips right here. What is the worth of each pip? Okay, at least we have 1 pip, 2 pip, up to 40. What is the worth of these pips? It is not that they just take this 40 and give you a certain amount. No, each of the 40 pips from one, each of them has a value. Okay, this is what we have right here, dollar value per pip. Okay, per standard lot. Now remember, we have our standard lot, we have mini, and we have micro. So the dollar value per pip per standard lot is bigger than the one we have for mini. Why the one we have for mini is bigger than the one we have for micro? Now, let's, for example, we have per standard lot, let's say a pip, one pip is worth $10. Let's say it's what the worth of one pip is $10, which means if you trade one standard lot and if the pip should move in one, it means you have made $10 on that pip. Now remember, one standard lot is 1. Why mini lot is 0.1, which is how do I put it? Which is multiplied by 10. Sorry, divided by 10. Okay, which means as this one is $10, dollar value per pip per mini lot size is going to be $1. It's going to be $1. Why for this? When you divide this by 10, it's going to be 10 cents. All right, it's going to be 10 cents. It's going to be 10 cents. So the higher the standard lot size you trade, the higher the profit you are going to make. And the higher the standard lot size you are going to trade, the higher your capital is going to be. Okay, don't think because of this higher profit you have $200 or $500, you now go and trade one standard lot. It does not work that way, please. It does not work that way. Okay, now let's go back to the profit. So number of pips, for example, we have made 40 pips right here, and dollar value per pip per standard lot. So we have used standard lot right here, for example, okay, times number lots number. Now this is it. We have sorry guys. So now this is, we have 40 pips right here, multiplied by $10, which is each pip cost $1. Just as I have explained right here, each pip, let's say it costs $10, then multiply by one lot. Remember, we have traded one lot size. Okay, now I don't want you guys to get confused. Look at the pip. We were able to get the pip right from this, from the movement of price. Okay, we're able to get the pip from the movement of price. Now the value per pip, each pip, okay, each pip movement cost $10. Okay, we made 40 pip and each of these pip cost $10. Okay, we are making illustration on standard lot right now, guys. Don't get it twisted. 40 pips, each of them cost $10. Okay, so you are going to multiply 40 times 10. Okay, now how many lot size did we trade? For example, we have traded one lot size. Okay, if we have traded two lot size, then it's going to be multiplied by 2. I hope you understand. But for this, we have traded one lot size. We have traded one lot size. So it's going to be 40 pips multiplied by 10, multiplied by the number of lot size we have traded. Okay, in this case, multiply by one lot size. So once you multiply this is going to give you $400. Okay, so which means movement of 40 pips alone by trading one standard lot has given you $400 profit in this example. I hope this is clear. So for those who will be using mini lots, okay, so it's going to be 0.1 right here, is 0.1 instead of having one lot size. It's going to be 0.1 lot. I hope this is clear. So once you multiply this 40 pips times sorry, it's not going to be this is going to be $1, not, it's going to be $1, not 10. Okay, because this is going to be divided by 10. since we are using mini lot size as an example, all right? So multiply by 0.1, then it's going to give you 40 pips. It's as simple as that. But nevertheless, guys, all of these things will be calculated by the broker automatically, but we are just sharing this for educational purpose only, so that you can have that knowledge to know how they come about these profits. I hope this is clear, guys. But for you, you don't need to bug yourself, but for educational purpose alone, this is why we are sharing this with you guys. Okay, so let's move on. So now, another way to look at this is this. Let's say you buy euro 100,000. All right, 100,000. That means, remember, one standard lot is 100,000 units. All right, 100,000 units. So which means you buy euro and pay 135,100. Okay, which means if you are buying euro from someone at this price, okay, which means you are going to buy it at 135,100. So if you multiply this 100,000 by this, you are going to get 135,000. If you multiply 100,000 multiply by each euro versus US dollars, it's going to give you 135,000. So for you to buy 100,000 euro, you have to pay 135,000. So now let's say you have bought 100,000 euro and pay 135,100. So later on, if price now go up in your favor and you decide to sell the euro back, remember you bought it right here. You have the euro in your hand. Okay, the euro is in your hand after you bought it right here with 135,100. So later on, this now appreciates. Okay, you see that the value has appreciated to this level. Remember, you still have the 100,000 euro with you, so you decide to sell it back at this price. So when you take this one away from this, it's going to give you $400 as your profit. It's as simple as that. Very simple arithmetic. Okay, I know some people may not be good at math, just the same way I'm not. But remember, the brokers will do all of these things. We do all of these things for you and I. So, but we just need to have that understanding. I hope this explanation is clear. Please let me know if what I've shared with you so far is clear. Let me know if what I've shared with you so far is clear before I go further. Still waiting for your response, guys. All right, Mr. James said getting clearer. All right, thank you so much. I'm happy this is making some sense to you guys. So now let's look at this. You may be thinking right in your mind, probably for those who are new, you may be thinking, why do I have to invest 100,000 euro to make just 400? Why? That is what is maybe running in some people's mind right now. Perhaps those who are new. Now, it does not really matter that you need to bring in this $100,000. Okay, so without leverage, you have to invest 135,100 to earn just 400. Imagine that, which is 0.29%, not even up to 1% return. So now, with the help of leverage, it gives you and I the opportunity to invest small amounts to make big amount of money. So Forex broker allows you to use leverage, at least leverage 1 to 100, 1 to 1,000. I'm going to use 1 to 100 to explain this. We have a lot of broker with leverage 1 to 2,000, 1 to 1,000, 1 to 500, 200. But I tell you guys, a lot of people do not understand the use of leverage. But for the purpose of this class, I'm going to break everything down to pieces for you guys so that you can understand, right? Because in the past, I've had series of messages from people about leverage. A lot. And my advice to you is that even if your broker offers 1,500 leverage, use it. What is the most important thing is your money management. If your broker allows you to use 1 to 100, use it. If they allow you to use 1 to 1,000, 2,000, even 5,000, use it. Use the highest leverage. You only have the opportunity to buy more. All right. Now let's continue. If we employ leverage of 1 to 20, we just need to invest a margin of 6,755, okay, which is 5% of the position, and return becomes 400 divided by 6,755, which is 5.9% profit. So if you have invested this 6,755 and you make $400 as your profit, is that a good business or not? Obviously, it's a good one. Now, I'm going to use this one to explain leverage a little bit more before I move to the next slide. Now, what is leverage all about? Leverage is like a collateral. It's like an opportunity being given to you by your broker to invest the power they have given to you to buy more with the little you have. Now, if you choose leverage 1 to 100, for example, now, and you want to trade one standard lot, okay, it means this 100,000 units divided by 100, okay, divided by 100. How much is that? It means you need to make a deposit of 1,000 for you to trade this. That is why I said earlier on that you need at least 1,500 and above to trade standard lots. Okay, so now you are using leverage 1 to 100. Okay, now you want to trade one standard lot. It means you need to deposit 1% of any lot size you want to trade. Okay, if you are using leverage 1 to 100 for the purpose of standard lot size, which is 100,000. Okay, if you want to trade one standard lot, remember one standard lot is 100,000 units. Now, this is where the units comes in play for broker to calculate your leverage. Remember, I said you don't need to bother yourself with this, but we are just explaining this for educational purpose. This is where the use of units comes in play, okay, with your leverage. So for you to trade this, remember this is one lot size, one lot, okay. So if you are trading one lot size, you are trading 100,000. So as you are trading one lot size, which is 100,000 units, and you have leverage 1 to 100, okay, which means 100 divided by 100,000. Okay, so which means you are going to drop in 1% of 100. Okay, let's simplify the whole process right here. Let's simplify the whole process. For you to trade, if you are using leverage 1 to 100, which means your collateral, okay, because your leverage is like a collateral, which is also called the margin. It's like a collateral. So which means you need to drop 1% of 100. All right? I hope you understand. So now if you now divide this into, break this into the lot size, which means as you are using leverage 1 to 100, then we need to put in 1% of this amount as your collateral, 1%. which means that should be, please mathematician in the house, please help me out. What's going to be 1% of this? That should be like $100. Okay, which means for you to trade this, amount, you need to drop in 1% of your leverage. All right, and if you are using leverage 1 to 500, okay, let's say if this is leverage 1 to 500, then obviously this one is going to become 500. Okay, if you are trading one lot size, it's going to become 500. All right, so your deposit, which is your leverage, is going to be lesser. So the higher the leverage, the lesser the capital, the lesser the collateral you are going to put in for the trade. I hope this is clear. So the higher the leverage you have, the lesser the capital you are going to put. So if you are, let's say we are using ratio leverage 1 to 500, okay, leverage 1 to 500, which means one standard lot right here is going to be 500,000. Okay, remember, one lot size is 100,000, which leverage 1 to 100, so it's going to be 500,000. If it's going to be ratio 1 to 50, then which means one standard lot is going to be 50,000. Okay, but let's go back, don't get confused. So leverage 1 to 500 means that your lot, the unit is going to be 500,000. So you want to drop in 1% of 500,000. Okay, so you only need 1% as your collateral to do all or to trade this. Okay, so the higher the leverage you have, the lesser your collateral. I hope you understand. The lesser your collateral, and the more you'll be able to buy additional trade. So if you have $1,000 in your account, okay, and let's say Mr. A, okay, Mr. A has $1,000, Mr. B has $200. Now, what you are going to, and you both of you are using leverage 1 to, let's say leverage 1 to 500. If this person, Mr. B, should open 4 to 5 trades, he should stop. He will not be able to open more trades than Mr. A. So that is the power of leverage. Leverage gives you the opportunity to buy more. Okay, so now if you are using lesser leverage, you will not be able to buy more, which means your borrowing power is limited. If you have higher leverage, your borrowing power is high, and if you have lower leverage, your borrowing power is low. It's as simple as that. So that is what leverage does for you and I. It only gives us the opportunity to buy more. But a lot of people said leverage is dangerous. Taking higher leverage is dangerous. It is not dangerous. I have challenged this with, I have challenged a lot of professionals with this, and believe me, it's not as if I'm boasting. Some of them were not able to defend this until I personally broke it down to them. All you need is just your money management. It does not really matter how many leverage you are using. Even if you are using leverage 1 to 20, your money management is the most important thing. But the only disadvantage is just that if you are using lesser leverage, you will not be able to buy more than those who are using higher leverage. I'm going to make one example right from here before I go into the next page. Okay, I'm going to make one example right here because I want it to be more clearer to you guys. Let's say Mr. A has $100, okay, as trading capital. B also has $100, okay, as trading capital, and both of them are using, okay, let's say Mr. A is using leverage 1 to 500, Okay. Mr. B is using leverage 1 to 100. Now, with this, take a look at, with this, Mr. A, we have the power and the ability to buy more trade than Mr. B. To trade more than Mr. B. Why is that? If Mr. B should open like 3 positions, Mr. A can open up to let's say 9 or even more, for example. Okay, so the more trade you open, the more you will be closer to your margin call. What is a margin call? A margin call is a message being sent to you by the broker telling you that you do not have enough borrowing power anymore, which means your capital is getting low. I don't know if this is making some sense to the to some people in the class. All right. The purpose is just to explain and break this down to you guys so that you can have better understanding. I know those who are new, this may look like a magic to you. This is how it's going to be to any newbie. We don't need to deceive ourselves, but once you stay in the environment, this will keep making some sense to you. But the better for you to learn, the more you learn, the better for you. Okay. So now, to break all of these things down in one sentence, to break everything down. If you are using leverage 1 to 100, which means 1% of 100 is needed. Okay. If you are using leverage 1 to 500, which means you need to deposit 1% of that 500 to take any single trade. Okay. So, and does not, you are not tied to a particular trade. You can take any trade with that. I hope this makes some sense to you guys. Please let me know if you have any question, and if this is clear to you, let me know in the chat if this is clear to you. And if you have any question, let's have it in the chat. Thank you so much, Mr. Ayolede says you are communicating well. I appreciate that. So guys, let me know. Still waiting for you guys. Okay, Mr. James says, I'm getting it, but with time, it will be more clearer. Oh, okay, all right. Of course, that is it. Glad to hear that. Okay, you may rewatch this video later on once we make it available, probably in the next few days. Okay, somebody said much understood. I appreciate that. Okay, so since there is no question, let's dive into the next slide. Let's dive into the next slide. Okay, we are still on the issue of explanation. It is important you understand this aspect very well so that you know and understand how broker comes, how they come by your profit. Okay, don't just think that broker, they are just giving me any profit they like. No. Okay, so now we've made an explanation of how to profit from Forex move. Okay, we've made the buying side, which is the long, going long as an example. So let's make going short as another example right here. Okay, so we want to use selling as another example so that you can understand how market moves from both sides. So now let's say we are going short Euro USD 1 standard lot. This is just the opposite side of what I've just explained in the last slide. Just the opposite side. All right. So now let's say after you've looked at your charts, your strategy says it is time to sell Euro USD. That is what your strategy is telling you. For example, now let's say your strategy says you should sell, and the current price of Euro USD as at that particular point in time is 1.3560. For example, let's say this is the actual price as at that time, as at the time your strategist gives the selling signal. All right. Now, let's say you have sold at this price, which means sell Euro USD at 1.3560. Okay. Probably, perhaps after 3 hours, after 5 hours, or the next day, market now drops from 3560 to 3520. Probably after 1 or 2, 3 hours, depending on how fast market is able to move. So now market now drops from this number to 3520. So when you take this one away from here, the difference is just 40 pips, which means as market drops and you quickly buy what you have sold back, it means you have made 40 pips profit. Okay, this is not the money, 40 pips profit. All right. Now, I know there is a question that might be running in some people's mind. Do I have to, most especially the newbies, you may be thinking, do I have to buy, I don't have euro. Where do I get the euro to sell? You don't need to have it in your hand. What you need to do is to deposit, have some money in your broker's account. As you are buying anything, the broker, it is their job to merge you up. Okay, it's like they are borrowing you the euro. Let's say you want to sell the euro right now and you do not have the euro. So as you click on sell on the broker's platform, they are automatically borrowing you the euro. Automatically borrowing you the euro. So as you have bought, as you have sold the euro, remember, they give the euro to you by you giving them a collateral. Okay, the collateral is the amount you are putting into the market. Okay, the percentage of your capital you are putting into the market as at that particular point in time. Let's say you are putting 2% of your capital to sell Euro USD. Why do you have to give them the 2% of your capital? You may use 3%, you may use 1%, but we don't recommend more than 2%. So you are giving them the 2%, the sense that if the trade did not go down as I expect, because once you sell right here, you are expecting it to go down. So if the trade should not go down and it continue pushing up to a certain level, please sell it and take your hero back. Sell it and take your hero back. So it means as you have sold, they have taken their hero, and the little money you have put in as collateral is gone. It's as simple as that. So I'm referring back to leverage as well. Okay, so now at this point, let's say you have sold right here. You have sold Euro USD right here. So it is important, remember, they borrow you this currency to sell it to someone. So as you have sold, and if price should drop to your own to the area where you wish to sell, so you need to buy it back. After you have sold, you need to buy this euro back and return it back to the broker. All right, so you have sold it right here. Okay, as market drops, then you buy it back and give them their hero. So the profit between here is your own, not the broker. Is your own. I hope this is clear, guys. Okay, I hope this is getting clearer to you. So the difference between here and here is just 40 pips. So let's make profit calculation. So the profit is this, the same way we done it on the last page. Number of pips, which is 40 pips right here, multiplied by dollar value per pip. Okay, dollar value per pip standard lot, multiplied by lot number. Okay, which means 40 pips, which is the pips difference we make right here. Then each pip is $10 according to standard lots. each pip, then multiply by standard lot, which is we are trading one standard lot. Okay, I hope you understand this. So the difference is just 400 US dollars. I hope this is making some sense. This is very, very clear to you. I hope this is clear to you. So another way of looking at it is just that you have euro, you sell euro and receive 135,000, and later on you buy it back and you will be paid, you pay this 135,200. So the difference between this is your profit, okay, which means you've earned $400 profit, guys. So I hope this is so clear to you guys in the house. If this is clear, please type in clear. Our time is fast spent. Just hoping we'll go on the chat today, but obviously we'll not be able to do that. We'll not be able to do that. We have to stop right here. Then tomorrow maybe another lengthy day for us. So guys, I think we need to stop right here on this page so we can continue from where we stop tomorrow, because I don't want to rush you guys. So I think we need to stop right here today. So if you have gained some value, please let me know in the chat. If you have gained some value, please let me know in the chat. Let me know in the chat. So tomorrow we are going to continue. We're going to continue from this, and obviously tomorrow we are going to dive into the chart. And believe me, tomorrow is going to be a lengthy day. We may spend close to 2 hours because I will need to digest a lot of things, to put out a lot of things to you guys, most especially the newbie and some intermediates who are making silly mistakes. So tomorrow you are going to get everything perfectly well. Okay, so you want to be here on time tomorrow, and unfailingly we are going to kickstart exactly 7:30 tomorrow. We are going to kickstart exactly 7:30. We have spent close to 1 hour 40 minutes right now. Okay, and I don't want it to be more lengthy so that you guys can prepare for the week. Okay, all right. So guys, if you have any question, it's time for question and answer Q&A session. Please put it in the chat. Let's answer the question under 5 minutes before we call the session a day tonight. If you have any question, please put it in the chat. If you have any question, please put it in the chat. If you were here yesterday and you are also here today, if you are not here tomorrow, believe me, you've missed. I tell you, all what we've done so far has been practical, but tomorrow is going to be has been theory, and tomorrow is going to be, we are going to go practical. 90% of what we are going to do tomorrow, 90 to 95% is going to be practical. So you want to be here, right? Somebody said, after the training, can we form a forum for trading section? Of course, you can discuss on our chats, on our Telegram group. So you can open discussion on our Telegram group, and the admin will be there to respond to you. And anyone who wish to contribute, we definitely do that. That will be fine. This is a general class. That's why we have to make it general. Okay. After the 3 days, we have advanced course for those who will be willing to join. Okay, there, that is when we have a closed room discussion. Okay, basically for those who will be taking the class. Okay, learning level stuff, and I will say that is a different phase entirely compared to what you'll be learning, what you have been learning since yesterday, today, and also tomorrow. All right. If you do not know anything about Forex, you don't know how to trade, what I have taught you between yesterday and today, it's a guide, and tomorrow is going to be a hand up on practical. And believe me, if you don't know anything about trading, tomorrow you get yourself familiarized to it, and you'll be taught the exact thing you need to know to start trading, how to take a trade, how to close it, how to put your stop loss, your take profit, and every other key things you need to know as a trader to start with. Okay, plus a strategy. Okay, because without a strategy, it's not going to be possible. Plus a strategy combined with basic money management. This is going to be really, really powerful. That is why I said tomorrow's class may be lengthy than maybe up to 2 hours. Okay, actually the 3 days is not enough, but because this we need to cut everything short to be sure that we meet up with every aspect, and we have just added some content to this, which is part of what we've shared with you, and what we'll be sharing tomorrow as well. So you want to be here on time. Tomorrow we'll be kickstarting exactly 7:30 p.m. tomorrow, nothing more, nothing less. Okay, I'm interested in the advanced class, and as yes, Mr. Femi, you want to be here tomorrow? I have some huge discount basically for those who will be here tomorrow to the end of this class, to the end of the class. Okay, so this is going to be a huge advantage for those who will be here, because I'm definitely sure after the class and after some people watch the 3 days video, they will come back and they'll be interested in taking the advanced course. So for you to be here tomorrow, waiting to the end of the session, then you have advances, some discount that is going to be massive for you. Okay, so let's wait to tomorrow. It's not going to, it's an education that you will take and you will be glad with yourself. Okay, trust me on that. And what I'm going to share with you tomorrow will give you another confirmation if what you should be expecting in the advanced course will be there or not. All right, but trust me, no one has ever taken our advanced course and no, and come back with negative feedback. That is another assurance I can give to you. All right, so any question, guys? Any other question? We teach how to read the chart and every other thing. Okay, and if you have been trading, you've attended 1 or 2 courses in the past, what you need may be probably go back to your archive and relearn. Okay, okay, if there is no any other question, let's, okay, I think we have one. Okay, we'll be given the privilege, since this is known beforehand, we'll be giving the privilege, Mr. Femi. Okay, just let me know. You can chat with the admin on the group and indicate your name. I think I'll put this your name in my memory so I won't forget that. Okay, all right, I know a lot of people might not have the chance tomorrow. Okay, but ensure you are here so that we can we have the opportunity. But if once the video is out, ensure you watch the video. That is going to help you guys a lot. Okay, so in the absence of no other question, thank you so much for being here. I appreciate every one of you for being here. But one thing I'll keep advising you guys is that keep learning. It helps a lot. All right, this is something that has helped a lot of us, guys. Don't think you've learned and you're going to drop it. Forex is not like that. Keep learning, and if you have blown your account in one way or the other, believe me, keep intensifying your effort. It's going to pay off. It's going to pay off. I need to share my story with you under a few seconds. My first 2 years, I blew close to 5 different accounts in my first 2 years of trading with good money in it. But today, it's a thing of the past. It's a thing of the past. I was able to gain my consistency just 2 years after I started trading. Imagine that. 2 years, 24 months after I started trading. Okay, so if the zeal, the courage, and the urge to learn was not there, I would have given up, and I won't be here talking to you guys today. But to the glory of God, I've been able to train and coach, even mentor hundreds of people. Okay, so thank you so much, guys, for being here. I'll see you guys same time tomorrow. Let's be on time. Thank you so much. God bless you. Bye bye for now, and have a lovely night rest.